First off, Melissa, can you tell us a little bit more about what the forbearance was, just in case
Mhm.
somebody doesn't know, or in case they didn't realize, and how it's affecting people at the closing table with real estate?
Absolutely. So it's a topic that is becoming more of a central concern. And I can't say that it's necessarily front and center yet, but it's definitely creeping its way from the back burner. I've had some clients recently who had fallen on hard times under the COVID cloud, right? That they weren't working, they weren't able to make their mortgage payments, they've missed payments for now upwards of a year,
Mhm.
and they were eligible for forbearance because that was something that was extended to a lot of folks during COVID that we were able to take advantage of, which was a great reprieve for people who needed it. The biggest hurdle, though, Emilio, is to make sure that people understand it. It is not that your mortgage payments went away for a year and thank you, federal government, thank you, big bank, I appreciate the gift. It is that there was an extension of credit, basically, or a forbearance such that that loan balance was just going to be tacked on to the back end. And if there was any fine print that you signed relative to your forbearance, you really have to go back and read what it says as to how much you are now going to owe. I think the particularly scary part is that there have been some occasions in the past where forbearance balances don't even appear on monthly mortgage statements. So if I'm looking at my mortgage balance with Chase Bank, it may not indicate there is a forbearance balance of a 1 year of past mortgage payments that I've missed. So it's easy, I think, when you're just looking at your monthly mortgage statement to forget that there is now going to be this sort of big balance lurking in the background that will have to be paid in order for the closing to be completed. And the overlay to that is the escrows, right? So if I'm not making my mortgage payments, is my mortgage company going to be making my tax payments? So if my tax payments are $5,000 a year, $8,000 a year, $10,000 a year, whatever that number is, there may be some escrow shortages. Now, granted, it should be all built into your monthly payments, but if there were any escrow increases or if there's any penalties that the bank had to absorb, those are going to just be added on as well. So it's really important that we're sort of paying attention to what that final number is going to be and what your mortgage payoff is going to be. While we are on the cusp of all these folks that may be facing, big forbearance balances, I would recommend that if you as an agent are preparing a net sheet, that you ask for your clients to furnish you with a payoff statement, not a monthly mortgage statement, because those forbearance balances may not be reflected. You don't want to be caught shortfalling that mortgage, because that could be the difference. I mean, think about what a mortgage payment is over the course of a
Mhm.
year. With escrow shortages, that could really make or break the transaction.